Hey man, things are really starting to heat up in the market, man. A lot of the larger companies that were reporting earnings, we're getting understanding of where the market can go now. So let's see what happens in the next few days. Let's get right into it today. Facebook reported amazing earnings. The stock is up over 5% in the after hours, and it beat expectations, so which is very good. And as we know, we've been waiting for these larger stock tech companies to report earnings so that we can see which direction the market wants to go. We saw a huge decrease in volume over the past few days in the major indices, purely because these larger companies needed to report earnings, and many funds and institutions were not buying or selling heavily at all this entire week. That's why the overall market has been pretty stagnant these past few days. So with Facebook now reporting very good earnings, Apple still needs to report earnings. They haven't reported earnings yet. And then tomorrow, Amazon after the close, Twitter is going to report earnings as well. And then Thursday in the pre-market, Caterpillar and McDonald's and these other larger companies are going to report earnings. So after tomorrow, we're going to most likely see, a continuation in some sort of a trend in the market. We're going to have to see, because once these larger trillion-dollar companies report earnings, and that's it. Like, we understand, okay, like these companies had good earnings. All right, the market can continue on upward. Or they had good earnings, let's take profit. The market can continue on downward. So the fact that Facebook reported good earnings, that is a bullish sign for the overall market. But, we still need to wait on Apple and Amazon, essentially, as well as, Twitter and Caterpillar. Caterpillar is a very large company in the Russell 2000. And it's heavily weighted in the Russell 2000 as well. So let's see how these stocks pay off and how they report their earnings. All right. So if we look at the S&P 500 on a 15-minute chart, we can see that it gave a fake breakout signal above resistance. So the resistance that I said was 418.25, and then the next resistance was 420.54. Obviously, we never reached 420.54, but we did break above 418.25 periodically. All right. We held above there for about 30 minutes and then we ended up falling right afterward. But because there's no resistance levels above for the SPY, we didn't know how high it could go. So if you did go long, there is nothing really to tell you where the SPY could go for another $2 if you were just looking at the SPY. Okay. But the reason why I give you guys multiple levels of resistance and support is because you have to use these levels in Confluence. All right. So now, if you look at when this pump was happening, so this is basically the QQQ on the left and the S&P 500 on the right. They're both 15-minute charts. All right. So on the Qs, you can see that the resistance levels that I posted was 340.76 and 342.14. The Qs resistance level worked absolutely perfectly. Okay. And the exact candle that we approached the resistance on the Qs was the candle that we broke out on the S&P 500. All right, so you see this large green candle right here? This is that same large green candle on the S&P 500. But the S&P 500 had no resistance upward until 420.54. Okay? But on the Qs, we made a huge move and we approached this level of resistance at 340.76. The same area on the SPY. Okay, so we have to key off of how the other indices are doing. So if the SPY broke out and there's no resistance overhead, you have to look at the Qs and see, okay, we are literally exactly at resistance on the Qs, all right, on the Nasdaq. So you should have taken that as a, as a sign that, hey, the S&P 500 is, potentially at resistance because the Qs is at resistance. And if the Nasdaq can't continue going on higher, then that means the S&P 500 is going to start falling. And that is exactly what happened. The Nasdaq failed at resistance almost perfectly. I said the resistance was at 76. It ended up going to a high of 340.85. So it was off by 9 cents. But obviously, if you short here, you can have a stop loss a bit higher. You could have had a stop loss over here at 341.06. So that would have been your stop loss for puts at this resistance level. And that would have worked out very, very well for you. So that's what you have to keep an eye on and understand here for the overall indices. That's why I give multiple levels of resistance and support throughout the day. So yeah, basically, if we look at now, let's just go back to the S&P. Oh, sorry. Yeah, let's go look back at the S&P. Obviously, it broke above this resistance level, but it couldn't retest this level of resistance at 420.54. But it stayed above the support levels, which is great. So these same levels essentially are going to hold. Obviously, you could say the next level of resistance after 418.25 would be, 419.01 on the SPY. And, that's completely fine. But you need to understand that on the Qs, that was a very beautiful, beautiful run up. Like, you have to look at multiple charts and multiple indices at the same time and see how they're all doing. Because once you do that, the more information that you intake and the more information that you're, watching, it makes your trading that much more easier. So you can see that the Qs stopped at resistance. These same levels are basically going to apply. Prior support, it broke through 339.33. And then it's retesting, it held above 338.22. Okay. So now the next resistance level is obviously going to be the prior support at 339.33. And then again, the next resistance level above is going to be 340.76 on the Qs. All right. So, it just worked out really, really perfectly today on the Qs and the S&P, because the Nasdaq is basically going to be the main thing that many people are going to be looking at, given that Apple, Facebook, all of these large tech companies are reporting earnings. Okay, so that's something that you have to take into consideration for the Qs. All right, that's basically my analysis for those. The IWM was the clear winner earlier on into the day. It broke above resistance at it fell down below support, and then it broke back above at 228.07. It broke above this red line right here. And then this trend line here, this upward trend line, you can see the price just continued trading around it. So this level is extremely important for the coming days on the IWM. We need to see if it can continue on higher and what will really happen here. So we can see that it fell. It broke above this resistance line at 228.08 and this upper trend line, but then it fell and then it consolidated back above this horizontal line here at 228. It stayed here and then it popped right back up. So now this line here at 228.07 and this diagonal trend line are going to be very, very key levels to see whether or not we can continue on upward or downward on the IWM. All right, so these are going to be the levels of resistance and support now on the IWM. So the first level of resistance is going to be this trend line here at 229.17. It needs to trade above that. And then if it breaks above 229.50, that is another bullish signal. All right, the level of support that needs to hold is 228.07, which is this, important level of support here. All right, so that's my analysis on the IWM. All right, so now let's check out Bitcoin and Ethereum. So Bitcoin obviously has been having magnificent few days, right? We bounced off of the exact trend line that I called out before. We called out mirror calls, and those mirror calls were up 124%. So I sold half of them at 124%. Mara is continuing to go higher, which is very, very good. But the important levels now on Bitcoin are going to be 53,830. It needs to hold above that, and 55,600. Essentially, it needs to break above that for it to continue on higher. But now, what's interesting is that Bitcoin's MACD level is now beginning to get very overbought. But the fact that it's still remaining above this level of support is still a very, very bullish signal. So now, essentially, we just need to look at these two levels here. That's literally it. If it stays above this level, that's bullish. If it breaks above this level, then that is also very bullish. But yeah, that's it. This is the support. This is the resistance. Keep your eye on those two levels. Now, Ethereum, again, the fact that Ethereum continues to make new all-time highs, that is very, very bullish for Bitcoin. I cannot stress this enough. The fact that it's continuing to make new all-time highs. Bitcoin needs to catch up. That's literally usually what happens. When an altcoin, especially when Ethereum is leading, right? Bitcoin, after all of the profits go out of Ethereum, right? They need to go back into Bitcoin. So as you can see, Bitcoin is trading well below these levels of resistance. But Ethereum, conversely, is essentially trading way up here. So Bitcoin still has a huge way to go up. All right, so that is why I'm essentially very, very bullish on Bitcoin, because Ethereum is really, really pushing it to the sky. So Bitcoin, compared to where Ethereum is, would be trading up here. And that is extremely, extremely bullish. So in the next few weeks, potentially, we can see Bitcoin trading above 65,000 again. That's something that we should be watching, and that's something that we're monitoring every day, and it looks pretty good for it to happen so far. And let me go ahead and go over Mara as well. So Mara, we got into Mara calls, and now it's approaching this level of resistance here. The level of resistance for tomorrow would be essentially $39, which is this lower level, which is this trend line here. So $39 needs to break, and then this trend line above would be the next level of resistance. So you can see that Mara and RIOT's chart essentially look very, very similar. So there are multiple levels of resistance pretty close to Mara and RIOT, but thankfully we were in Mara, and Mara outperformed RIOT by 2%. Which is a very, very good thing. And those contracts, those were up 124% from the time that I alerted them on Friday. So that was a very good play. Mara did very, very well for us. And, I'm not really swinging that much because the overall indecision in the indices market. But, with Bitcoin and Ethereum, they're not really trading as in confluence with the equities market as much currently. So that really helps. But yeah, that's essentially my analysis for Mara. Obviously, if we start to fall, I'm going to sell the rest of my position for profit, and I'm just going to lock in profits. And if you haven't taken a position on Mara, if we fall down to 3250 and Bitcoin still looks pretty bullish, then I would buy more calls. That's probably what I'm going to end up doing as well. If for some reason we end up falling, but Bitcoin's price remains high, I'm going to buy more Mara, most likely. And yeah, that's essentially it really for Mara. Let's go ahead and look at the dollar. So the dollar is continuing to puke, right? It's continuing to fall. It didn't really have that much of a correlation to the indices market as well as to Bitcoin and Ethereum. Even though the dollar did fall, the SPY, the QQQ, and the IWM, the overall market did not, start skyrocketing. But it's because the dollar is just so weak. Like, there has to be certain days that they don't completely go in confluence, which is fine. Anyway, the MACD is extremely bearish. This looks terrible because we crossed over, but the dollar price continues to fall. So once this falls below, the dollar price can fall even sharper, which is very, very scary for the dollar. Let's see if, we can continue falling even further on the dollar, but overall looks very bearish. So when the dollar is bearish, stocks tend to go up. All right, so let's see if that persists. But now with crude oil looks fantastic. Okay, and when crude oil looks very, very good, that is a very bullish signal for the overall equities market. So basically, in the future, if there is ever a scare of a recession or of, a market, downturn, anything, blah, 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 always key off of crude oil. Because if crude oil is doing very, very well and it's continuing to stay up, then all of the scares that you hear on the news or from people, traders, whatever, those are invalidated, because crude oil staying up usually means that the overall market is going to continue staying bullish. So as you can see, the MACD is extremely bullish still. It's still about to cross over on the MACD line, and we're in a bullish formation. This is a bull flag, and if we cross above, we can make new all-time highs on crude oil. So that's something that we should be watching as well. We can see a few days ago that it bounced completely cleanly off of the 20 exponential moving average, which is also a very bullish sign. And now we are continuing on higher. So that's really it. There's my analysis for the day. I hope you guys enjoyed it. Let me go ahead and show you guys how. So this is the Nasdaq chart from a very long, a longer time frame. So it's still bullish. We're trading above this January 1999 level on the Nasdaq, and we're still trading above this level right here on the SPX. So these are two bullish signs, because we're still oversold on the SPX, meaning that we can still go on higher, and we're still oversold on the NDX, which means that we can still go on higher. So that is, but on the IWM, on the RIOT, we are oversold at resistance. Okay, so now that's something that we have to understand. If we were still oversold, that would mean that there's still potential room to go higher. But the fact that we're overbought on the MACD at a resistance level, that is starting to become a little bit more bearish on the IWM. All right, so that's what I would, take into consideration. Be a bit careful going long on the IWM, because we are, overbought now. But yeah, that's essentially it. There's my analysis for the overall market. I hope you guys enjoyed it. Drop a comment, drop a like, subscribe to the channel, and yeah, have an amazing day. I'll see you guys tomorrow.